All right, what a week, huh? Today is June 23rd, 2013. Let's take a look at what the market did last week. And, right before the beginning of the week, we were saying that, when it take out this level here, it's at 1648 on the S&P 500, which it did on Tuesday. And, it's kind of taken out that and closed above that. And we're basically looking for, it might be, making a new it basically a higher high and possibly might come back up and at least tag these level up here somewhere around the 1670 area. But as it turned out in the Fed meeting the following day, it kind of retreated, but still, there were possibility that it will have a continuation after that little retracement to continue to move up. But then once it booked through this level, which is the 1598, on Thursday, and essentially this higher high scenario is out the door, and now the market seems to be heading it down. Now again, we were kind of warned to the possibility of a head fake, because even when on this day when it hit this pivot point, move above this pivot point, we're seeing a deterioration or continued weakness on the advanced decline line and the new high, new low. So that kind of gives us a clue that the market is really not regaining strength. It's just kind of flirting with some of these level and try to get rid of some of the dip buyer and just try to trap them. So right now we kind of see the market playing out to what it's supposed to tell us, that back here on the 21st on the S&P 500 and also on the 22nd, where all the indexes kind of got a little reversal on that particular day. Then on May 28th, when the Dow Jones Industrial 30 make a new all-time high, new all-time closing high all by itself with non-confirmation, including the Dow theory non-confirmation from the transportation. That kind of tells us that that could be potentially turn out to be the market top for this particular cycle. And in due time, it will either confirm it that indeed that particular day is the top of the cycle, or it will prove us wrong. But at the meantime, the technical is certainly indicating that there's a high probability that was the top for this particular cycle, and now we're going to look for a lower low and for looking at new closing low as the market start to retreat. So essentially, we see a low bounce here on the S&P 500 last week when it came down to this particular support level here, somewhere around the 1580. And right now, I wouldn't be surprised to see a little continuation down, because a lot of people were shorting here. So when it get back up to this 1598, we're probably going to get some short covering, and then they probably overshoot and get some dip buyer come back in and thinking this is all over. The downturn, once it get above this 50-day moving average, and we will trap these dip buyer one last time and then take it down, and most likely we'll next level we're going to see is somewhere around this 1530, 35 area, and that's basically where we most likely will see the market headed down, and eventually come down and get this confluence at the 50-day moving, the 200-day moving average, and this particular support level. And if you look at the spiders kind of tell us the same similar story. If you're trading the spider here, and you can see that this right here, as we book to this particular day here, get above that pivot, and we hit this in resistance. If we also put in a price channel here, you can see that it's actually also booked through this little channel, and it got a little bounce back up to this support level here, which is 159.75 area. So we're going to see maybe a little bounce because of the slightly oversold situation. Although we are not, in my indicator, it's not completely oversold, but it's getting very close to the oversold. So we probably will get a little bounce and get up to this 162 area before it retreat back down, and possibly come back and tag this 150, 156, 157, and eventually, we probably will see this little gap fill here. This little gap, we'll probably get this gap fill between 153. See what is that? 152.92. So it's 153, and 153, 153.64. So we probably will see this little gap get filled, and then eventually get back down here to this 148. And the gap is probably will tag this 200-day moving average around the 152, 151 area. And if we look at the NASDAQ 100, the NASDAQ 100 is also, it failed to tag that pivotal high but they also come back up and kind of tag this low resistance here, and then now pull back, and then it also came back below this support area, which is the to 29.11, 29.12, and now it's coming back down. It's also got this low trend line here. We take a look at this trend line, you can see that there's a low trend line up here. So it's kind of getting a little bounce off of that support. So most likely we probably see a little bit of continuation on this bounce here, and maybe get back up here at this retest this support level that it broke at the 29.10, 29.11, and again possibly come up and tag this 50-day moving average before it resume back down, and then tag the 200-day moving average and somewhere down at this level here of 27.80. And if we look at the Q, if you are trading the QQQ, you could also see the QQQ is also kind of got a little bounce here at the 70.13 area. And right now, most likely we'll see it to try to come back up to this close to the 71.90, 72 area, and then before we come back down and tag this 200-day moving average somewhere around the 68. And then if we look at the Russell 2000, the Russell 2000 really give us a big head fake, because actually on that day, on Tuesday last week, it actually closed a new all-time high because it exceeded this point here. And we thought that the small cap is really taking the lead again, and eventually rotate some money back in. But apparently, I guess there's a different story there. But whatever it is, I haven't found out what it causes Nasdaq to. I mean the Russell 2000 to close to a new closing high, but at least it's it kind of followed the general market. It came down and booked back below the support here at the 963.88, so it's that 964 area, and now it's got a little tag of a bounce, got a little hammer here on Friday, so it came back down to this support level here, the 954, and it bounces off that. So again, we probably will get a little continuation and retest this, the 971, 972 area before it come back down, and eventually, we'll tag this 200-day moving average down here at the 890, 892 area. So there's a little gap here, so it could come down and fill this gap. And also the other thing is, I also talk about the gold and the gold mining stock, and that's why one of the things that as a trader and also in technical analysis, is nothing is certain, right? The only thing that we could look at is the possibility, and then kind of get prepared for that. Because last week I was basically looking at this particular pattern here, and maybe possibly, gold would break this, this triangle, and possibly make a move up. And if we could get up to this level here, let's say, then there's a good possibility it could get back up here and tag this level. Then as it turned out, on after the Fed meeting, it's kind of broke through this particular support down at this 130, and now it's tagging this 123.40 area, and it got a little bounce. So we might get a little bounce here because it is oversold. It could be coming back up and maybe fill this gap, but anything could happen. So right now it's basically looking at this inside candle here. You just basically want to see which way you're going to break. If you're going to break on the downside, then the chances are it most likely will come down and tag this 120 and then possibly this 115. If we take a look at the weekly chart here, you can see there's that 115 level down here on this particular support. Right, that's way back at the 2010 area, and this is the 123, 124 area back here on this support. So there could be a possibility of tagging this 120, which would be this area here. Okay, and if we doesn't hold that, then definitely you're going to come back down and test this 115. But before that, I do anticipate that there could be a possibility that it will come back up and try to fill in a little bit of this gap here, because I think right now the trade is leaning to a short side right now. So a lot of people is leaning on one side of the trade, and we know what's that going to happen when everybody leaning on the same side. They basically go the opposite. That's how the market will cause maximum pain and fool most of the people most of the time. So good luck on your trading next week. It's going to be a little bumpy ride, but just prepare for anything. And I said, don't trade what you believe, trade what you see. Okay, good luck.